All right, all you devils out there, happy Friday. Sam here with you. Oh, well, let's see. It's about 12:45 here on the 15th of the month here. And, of course, we'll do a quick update here on Bitcoin. Then I'm going to try something a little bit different today. It's really not a lot of change from last week or the week before that. It's just we continue to be in this corrective mode here. So I'm going to try a little something different here and speak to some questions I got that might be helpful to those of you looking for more opportunity than we're seeing out here on this longer term count. So we'll get to that in a second, but just very briefly, just for any of those looking for a review here. I would have to call this the primary count now. The idea that we completed the impulse up here for the 1. Well, we do have an alternate that would have this being still a 3, and we're working on a 4. We'll look at that in a second. But I think this is the somewhat, I'd have to call this the consensus count. I go back and forth between one or the other, but this certainly is perfectly valid. If indeed we complete 1 here, and we're just doing, and this is probably the simplest count, just doing an ABC now here. Now there's a few little, there's some levels here that have to be paid attention to. If indeed we completed the 1 here and we've gone A, B. Now this is not a terribly clear impulse here, and it could probably be counted a couple of different ways. Now here I'm out here on a 3-day. Just to keep it simple, 1, 2, 3, 4. Well, that would imply the extension is in the 1. As currently as labeled, the 1 wave is longer than the 3rd. So we'd have to pay close attention to the 100% the length of the 3 projected for the pivot of the 5th down here. So this level down here at 12,200, here I should note here I'm on Coinbase. That would be the invalidation level of this count, right? We can't have the 3rd be the shortest ever under any circumstance. So that would be the invalidation of this, and we'd have to just relabel it. We'll cross that bridge if we get to it. But right now, that would imply that we're this consolidation we're in right now, which would be very typical of a 4, lends itself to one more push down. We've got the structural pivot high here potentially, right? It's always just that potentially support, right? Different than a demand zone. That's just potentially price support here. That comes in here. Let's call it 14 and change, right? Just to round it. We've got the 50%. If the entire length from the swing low to the swing high, if this is the 1, we're coming down for the 2. Well, the 50% is here at 14,695. We've got a nice little cluster here. The length of the A projected from the B, 1618, comes in here about that range, 14,577. And I've just got a nice little cluster down here, all in this range here. So if you're looking for opportunity to get positioned on the long side, this is a nice little cluster here you might consider with regards to dollar cost averaging. And then down here at 10,200, we'd have our 618 for the potential wave 2, right? Which would suggest we're going, let's see, get it on here. If we're coming down this low here, we're going to break all of this. We'll have to relabel this. Right, so perhaps this becomes the 3, the 4, and we get an extension in the 5. We'll cross that bridge if we get to it, but we don't need to assume that at this point in time. I think, given what we can see here, no reason to forecast that the move goes that far down. But the market has no obligation to do anything other than what it is inclined to do. So we don't want to be sitting down here with hard limit orders here. I would want to see the market, if it is indeed going to roll over here, I want to look for signs of strength here and signs of some sort of bottoming, which we don't. I think we could probably all agree we don't have currently as we just sit in this consolidation. Now we could blow out of this consolidation, but right now nothing really implies that anything other than the market to follow the path of least resistance, which would be lower. Now, the alternate count here, which we've looked at many times here, is that we put in the 3. We're doing an ABC into a 4 correction here as we consolidate here. You'll note here, I referenced this last week here, the length of the 2 per this count, if this is the 4, we're not yet to 100%. We're past the 786. We're in that pocket between these two. Kind of the same idea. It still looks like if this is going to be 1, 2, 3, 4, one more push down, we could hit some of these levels. Now here, this count here, we have a clear invalidation point. If we break the pivot high here, then we can't. This can no longer be the 4. So that would well, the benefit there would we'd have clarity. We could eliminate one of the possible counts here. A lot of people have already written this count off. I would be reluctant to do that just yet, right? Let's let the market prove it, right? Rather than try and anticipate and forecast because you don't like the look of that as the 4. Right, just a few things to think about here. So it's either this one or likely this one here. Also just maintaining the idea that there's 1, 2, this was the impulse, correcting here. All right, so there's your review here, but almost no change from last week. So let me push that off here. And then, so I'm just gonna bring up Bitcoin here. This is an 8-hour on Bybit here. We do a lot of trading and then we've got they're doing a competition here and our team is actively involved in that. Over on Bybit here, if you're not trading with Bybit, well, you've got links below here for if you're interested in that. Oh, hang on. Sorry, I always forget to turn off the other machine. All right, so I thought we'd do something just a little bit different here. No, we've dabbled with this before here. Just removing all the Elliott Wave, right? So we're just, I mean, really, if you look at it here, do we have a clear sense of what the wave count is? Well, I mean, we can simplify things. I mean, okay, looks like we're just doing something like that, right? So if you're thinking with your Elliott hat on, sure, you can see the reasonable argument that some sort of a 3-wave correction, right? Not unreasonable. And I'm just using some channeling here to help identify the change of trend, right? So clear downtrend. Here's the correction. And the downtrend continues. So pretty well, clearly established. Well, I got 1, 2, 3, 4, 5, 6. So this is a well-established channel as we continue to now at this point base down here. So we can see obvious locations here. I mean, this is drop dead obvious, right? I was almost reluctant to do this, but just for those, right, just as many are still learning, we can just see all the resistance that Bitcoin's going to have to deal with, right? And we've talked about this the last few weeks. How does the market move? Well, we move from an imbalance to where we consolidate. We find balance, imbalance, consolidation, imbalance. So we can see we've got 3 pockets here as we base down at these lower levels here. Now, is there a clear Elliott count here? Well, let me be more specific. Is there a clear Elliott count down here? I mean, this certainly looks impulsive, consolidation. This is impulsive. This likely impulsive, right? So you could probably talk yourself into 1, 2, 3, 4. Oh, could we be done? Well, here, let's label it, right? So here I'm trying to get the Elliott out of it here, and I can't resist it, right? It's hard for me not to, I can't look at a chart and not see it. So 1, 2, okay, just trying to play off of, okay, where's the consolidation? Well, you could see a 1, okay, maybe 1, 2. This would be the 1 of the 3, 4, 5, right? Maybe, right? It would certainly play with regards to where we see the market consolidate and where we see the imbalance, right? We drive from the imbalance, right? Find balance, imbalance. So what are we doing down here? Well, if you were thinking, oh, we're lows in, well, this isn't the pattern you'd hope to see coming off the low, right? To have a lot of conviction. Now, it's still, there's something could rip out of here, but as it sits right now, that wouldn't be the ideal basing pattern that you look for. I mean, really, there's an 8-hour. Let's zoom in down here. Let's get rid of this. I mean, what? Maybe you were thinking 1, 2, 1, 2, right? I mean, you're kind of. That's a bit of hopium here. There's nothing. What do we want to see as a basing pattern, right? We want to see something like that, right? Then you can get excited about potentially the upside. Right now, as it sits here, what are we doing, right? We're just ranging, right? We're just a big range, right? So in a range, what do we want to do in a range, right? We want to look to sell the highs and buy the lows. Now, of course, that's always easy in hindsight, right? Now, we could put some RSI on here, and I'm going to get to this in a second. All right, well, so we're putting in a low here. The RSI pushes. Now, note, then this is probably the most important lesson here I can give you as relates to RSI. The 50 level in the RSI is absolutely critical as to whether or not you're going to trend or not, right? So the fact you can see it here, the fact that we come up, we can't close above the 50 here, and then we roll back down. Clear suggestion here, if nothing else, that we're not ready to roll yet. So again, now this time we get through, but as we get up to this level, as we tap up 70 up here, there's no follow through, no legs up here. You could probably, oh Jesus, just do something like this for an order block here, and we'll look at some of that with the market structure in a minute. But you're just coming into potential, right? It's always just potential. That's to potential supply. So, okay, what else we got here? Okay, looks like maybe an A, B, C. Oh, I think we went beyond the algo play here. We went 786. So you're breaking down here. It's like we got maybe one close below the 65. So you're getting a little breakdown here. You're just going nowhere. What are we doing? We're going sideways. So does this make you want to just jump on a long here? Well, it doesn't really make you want to jump on a long or a short. What do we have down here? It's just consolidation, right? So it's just what the market does, right? So we have gone from this imbalance into consolidation. So there is very reasonable potential here that because of this imbalance here, that if we start to rally, we can come back and test some of the supply up here, right? We know there's supply, right? Look at all the volume, the business that was done up here, just as we can see all the business being done up here. But I mean, is there some advantage you would have here? I think not, right? You would have you might as well just flip a coin. Heads I buy, tails the only advantage you could potentially even talk yourself into as well, as I know that most ranges fail. Well, if I get to the low end of the range, I'm going to be a buyer. If I get to, and I could just track the RSI, right? If we're range bound, that's where RSI is best. When we're trending, right? When we're trending like we were doing here, when we're really hammering down, even though we got the little stutter at the 50, once that thing really starts to go, well, imbalance, right? Imbalance. Now, when we get down here, what do we see, right? This is just, this is RSI 101, right? We get a new price low, right? This is not complicated. We get a new price low, but what happens in the RSI, right? It's not matched, right? So we get divergence. So is that a trade you want? Well, if I'm on an 8-hour here, so yeah, I mean, there's probably a trade there, but that's a short term. You're not looking for you're not trying to pick the low here. I mean, you never know, right? I mean, could have been the low. It's possible, right? You have a count that would work here to get you into the fifth, but as we sit here in it right now, if you had longed it right here, how would you feel right now? I think a little uneasy about the potential here, because there's no signs of real explosive movement here. I don't have any volume on, but you just looking off of momentum here, there's no sign. We didn't get to oversold here per, let's just say below 30. Oversold is dangerous terminology, right? People lean into it too heavily. We are over 50 here, right? So if that continues to roll, but what would there be? I mean, if you're using any Elliott here, is there anything here to really lean into? Not really, is there? There's nothing, right? So, of course, one choice always is just sit on your hands. Don't feel like you need to be trading, right? If it's not there, it's not there. And right now, I think it's fair to say that while you can make a case here that this is an area of accumulation, is there really a setup here? Anything that would entice you to get long? Well, I would suggest not. Maybe if you had something explosive here, you've got all of this imbalance here. Maybe if you got something like that and you had a 3 come back down, you hit some structure here. Maybe you got an order block here or a breaker block, something that would give you something like that. Okay, maybe you could talk yourself into, let's see, something along those lines. If we came back down here for a breaker block, right, an order block that here would have held but then breaks and then come back, so now it's a breaker block. So if we come back to that, okay, well, maybe you'd put something together like this and say, okay, I'm in the pocket here, I've got potential reaction if this market moves quickly here. There's an imbalance here, probably some orders here that need to get filled. Let's kind of make that a little prettier. Okay, maybe, but we don't have that yet. So what's a trader to do? Well, again, don't feel like you have to be in the market all the time, right? Right now, a lot of people tell you cash is a good place to be, or just on the sidelines, or just in an interest-bearing instrument, something, right? You don't have to be in the market right now. When you're in the market, right, you're vulnerable. So why force a trade when there's not one there? Well, let's just back up and say I'm not saying don't trade here. Oh, come here, let's get you out of there. Okay, so let's just back up here, and let's take the Elliott off. Okay, how might we trade this? Well, let's, here, I'll take this off here. I think I've made that point here, and all I'm doing is all I did was just use the tool here to just do this, right? Not very hard, okay, right? I mean, did you need the volume profile to know where those are gonna be? Probably not, right? But just so we can identify those, I mean, why not, right? It's just sitting right there, why not use it? Here's a clearly established channel. Okay, so this is a question I got here, and this is the point of the video here today. I babble on about the Elliott count. This is a question from one of my members here, and he and I exchanged content. Oh shit, where'd we go? We exchanged content a lot. Come back here. And this is his question. He came to me yesterday, and I told him I would speak to this in the video today. Can you address determining the short-term trend reversal of Bitcoin on the next video? I traded against the trend yesterday on the hourly. I judged incorrectly. A big weakness I have, and I suspect for others, is trying to determine the current trend. I make Elliott counts, but they can be wrong, misleading, or misinterpreted, or other variants possible. I see on YouTube where a technical analyst might say if Bitcoin goes below the price, still bearish. If it goes above this price, that is bullish. And I'm like, how can you say that? I use CM. He's talking about the Chris Moody RSI that we just looked at, but Bitcoin doesn't have to turn direction yet because the CM is below 30 or above 70. He's absolutely right. So really what we're talking about here is how are we determining the trend? Right. So let's see. So if I recall, I traded on the hourly. Okay, so let's go to the hourly and see how we can do this. This is a very nice segue into some tools that we now have partnered with. You guys know the Sonar Labs people. So let's go to it, right? Let's just do it. So I'm going to clear all this out of here. So here's the 1 hour of Bitcoin, and let's get rid of this. Okay, now I'm going to make hot. See, if these would be in the invite only, so the Sonar Labs is now our partner, so you'll see a lot more content related to Sonar Labs in the market structure and smart money concepts. Now, if that's new to you, if you're not familiar with it, although I've been talking about it here for the last probably a couple of months, if that's new conceptually to you, or if you're like, well, I keep hearing about it, but I don't really understand it. It seems simple, but maybe I just better have a clue before I start trading it. Well, I do have a dedicated playlist here for you, right? If you just come over to our YouTube and go to playlists here, it's this third one over here. There are only 2 videos in it. Right, not over here where you see SMC. This is all for Ninja, right? This is for TradingView, and you've got a theory lesson here, and then lots of examples applied, right? So if you're unclear on that, and I certainly would want you to be clear before you start making any trades off of it, because it's deceptively simple. So I would encourage you to watch that. Take the little time over the weekend and watch it. Okay, right. So with that said, now let's get the indicator on here. So I'm just going to make it active. All right, so this is the latest version from Sonar Labs, as we're at 1.1.2, and they continue to refine it and tweak it, make it a little bit better. So I'm going to put that off to the side here, and let's just look at this. Okay, so just looking at it right now, how are we going to determine the trend? I mean, I essentially just told you there really is no trend, right? We're really just range bound here, right? And we can just, I mean, this is not hard for anyone to do. Right? Are we trending? Probably not, right? But are there trends within the ranging? There's certainly plenty of trends. So while looking at it, even out here, right, you're looking at this distance, you'd say we're range bound. Well, here I'm just going to use a channel tool. There's plenty of trading opportunity here, right? Plenty of trading opportunity. There's one. Oh God, let's just go through these a little bit here, and I'm going to refamiliarize you with one of the most powerful price action rules that should guide you quite well. And this is, Al Brooks really pioneered this as kind of the father of price action trading. And it's just a simple trend line channel break. So the theory is, and I would encourage you to consider this much like a set of median lines. When we're in a channel like we're here, right, which is easy to define, when we break the first break of the channel, there is a very high probability that there will be one more push to break this high to get a new extreme. It happens up and down, doesn't matter. Right, it's just the nature of the way the market moves. A break here, there's going to be one more attempt to try and push to new highs here. And you see this over and over again. And when you don't see it, if the market fails to get a new high, which here, while we do get a new high, we do get a new high here. It's slight, right? It's just enough to say, okay, that this break here, the correction was realized here, and that we did get a new extreme here, and then we get the trend change. When you don't see it, if this had failed, that's much like a set of median lines where the market fails to get to the median line and leads to a move equal to or greater than. This would be a tell if we don't get a new high. Oh, let's see if I can find here. This would be one on the way down here where I can show you one here. Again, looking here. Okay, so we get, well, you really have it both ways, right? So here's the first break that leads to the new extreme, but you could have fattened that up like this, right? And so it's important that you draw them the right way. We get a break here, but we don't, or at least have not yet come back to challenge that high. So, you know, the skinny one does get it here, and then the same thing here, skinny one. Oh, wait, we just looked at this one, right? The skinny one gets it. Right, there's the break. We get just enough to get to a new high. Now, same thing here, right? This would be, I would strongly encourage that you do this, right? Just prove it to yourself, right? So here, this is something you'll also see with channels, right? When we get overshoot, it often leads to overshoot on the other side. Now here, we don't yet, do we yet? I don't think we yet have it, right? But these can linger, right? So that is still a potential push to a new low. It's not there yet. Oh, I'm just going to keep going here just to show you that these are very, very consistent. Right, so here's the break. Here, right? I would encourage, pick any asset. You'll find this over and over again. Right, there's the new extreme. Right now we get, again, it takes a little practice to get used to what to draw. Here's a very, very narrow one. Break. We break the channel. Don't get to a new high. Right, that would be negative. Here's the new channel going down. So what would you assume here? Well, so a lot of that channel can help you with regards to identifying trade opportunity. But back to where we started, how are we going to determine where the trend is with regards to which one of these do we want to take? Because there's all sorts of channels here, and there's all sorts of trend line breaks. So how can I increase my odds? All right, well, now I'm going to circle back to the market structure where it's absolutely binary. There is no confusion about where the trend is. Zero confusion, right? That's the beauty of market structure here. There is no ability to misinterpret. Now trends change and you can be wrong, but at this moment in time, if I asked you here, where's the trend? What's your answer? Where's the trend? Well, there's a simple way that we can identify it via market structure, and that is this is the last low that gave us these. We've got change of character and break of structure here. This is the last change of character here that led to this pivot high. So I have a swing high. So if I draw it, the range that we're trading in right here is the range between these two extremes. The strong low here implies that the trend is currently up on the 60-minute. Because I do not have any breaks of lows down here. This is the last break of structure. So prior, this would have been the important low. But when we broke the change of character here, when we broke this pivot here and got the change of character, note, change of character, not break of structure. Again, if you're not familiar with the difference between those two, check out that playlist. It should clarify for you. So this is the current range on the 60-minute chart. Up, because this is the strong low. This is the low that did its job. It gave us a change of character, and then it gave us a break of structure. So if I'm now applying the trend line channel rule here, what I would anticipate is that if I get a break of this channel, even however small, if I get a break here, the market's going to want to push up to get to or at least break this high. Now, in order to do that, it's going to have to break this order block that's sitting right now. Do you see what's happened here? So let me get that off of here. So I'm assuming you guys are clear here. Wherever you see the strong low, that is you can get a sense of the direction. The other thing is here I have the fibs on. So if I just did it this way and brought it back this way, wherever you see the 50, the 618 and the 786, you know we're retracing here. So this trend is higher. So what that refers to is that as we move higher, if we start to come back down, we're coming towards the 50, towards the golden zone 786 to potentially with this as a target. So whenever you have a trend like this is established, your target is the break of the week high. This is the week high because it has not done its job of giving us a new low, breaking any structure. We've got internal little breaks of structure, but no dominant, right? Again, if I'm going too fast for you, if that, wait a minute. Back here, those two will clear it up for you. All right, let me come back here. All right, so as we sit here right now, are there trading opportunities in here? Well, let's just zoom in there a little bit. Okay, so here's an easy example, right, of the channel. Right, we got a nice channel here. Here's the break. Here's the break. Right, here's the new extreme, right? So this correction realizes, right? So when we get the break of the trend line, of the trend channel, and then we get the new low, this potentially now has completed. Now I get a strong low here. So as I start to move higher, let's get this off here because this can be confusing. I just wanted to draw your attention to, if you're not sure or like for whatever, or you're drawing these yourself, because you can do these yourself, right? Just a quick look at where's the 50, the golden zone 786, you know which way the trend is. Now, of course, we could put on here, what have I got here? Oh, I like the McGinley, right? So I like, this is a 21 McGinley, right? Price action traders love this, right? It tends to be a magnet. But if I put on the 60 minute, if I put the 50 EMA, it's damn near the same thing. So whatever your preference is, you can see how close they are. Now, when you get down to a much shorter time frame, 5 minute or even 1 minute, then you're going to find a separation between those two. But as it is right now, let's just go ahead and use the McGinley. So I can see, right, if that helps you, or if you need to color code it here, let's take off the McGinley. If this helps you, right, just put a 21 EMA. Oh, green. Right, trend is high. If that helps you, right? Maybe it helps you. A little color coding helps. All right, clear downtrend, break. Right, that doesn't mean go long. See, this is the mistake retail makes. With the break of the trend line, they think, oh, boom, man, all right, time to get long. No. Okay. All right. So let me, as we sit here. So as we've just come into this order block here, or supply zone here. So here's the last up bar before we get all these multiple breaks of structure. So we know this is a potential, right? It's always just that. It's potential supply. So the market comes up to tap, tap. Now, do you want to take that trade? Well, I would suggest perhaps you'd think twice about that because number one, which way is the trend? Higher. While there's a reaction there, oh, look at the channel. We don't have a break of the channel yet. So what you'd like to see if you're looking for a trade here and you're working off of the 60 minute, you'd want to see a break to imply, oh, I got a break of my trend line channel. Now that would suggest I'm going up here to get a new extreme. Now I'm drawing it way up here, but I mean it could be 2 ticks, right? As we saw on the previous example, it's just a new extreme. So you would look for it, anticipate that if we break this supply zone, that the next target is going to be up here at this supply zone, right? The one that the market reacted to the last time. Now, are these worth trading? I mean, here it is. Right? It was just sitting there waiting for the market to come back and test it. I know, it's hindsight. Right? What did we get out of that? 36.81. Why is this hard to trade? Right? Because the market's screaming right up. Right? So this is just human instinct, right? Our sense of preservation. Oh my God, I can't sell that. It's going straight up. Right? So just a reminder, right? We want to sell, we want to enter the market as close to where we're wrong as we possibly can. Right? So if you were, I feel like, I almost feel like this is condescending. People get this wrong. So if I sell it right here, right, my target would be down here at the low. Right? There's 17 to 1. So of course, it's very possible you're getting stopped out here, but you've got to be able to take that. You've got to be able to not freak out about that. So number one, reduce your size. Don't lever it up. It's particularly as you're learning this. It takes a little time to develop the confidence in that. Because here, who's buying that? Most likely, right? Most likely that's retail, because what does retail think right here? Oh, it's safe. We're breaking out. So it's safe to buy it. How did that work out, right? I mean, we didn't get the final target here, and that may roll over again, and we got channel breaks. But that would have been your target. So, you know, are you sad if you only got 16 to 1? You know, nothing says that you had to get out here. I mean, you could still, because what's now just happened? If I just take this right here, I'm just going to work off the 60-minute. Okay, now I know the trend is up, right? Because this is the strong low. Do I want this trade? So I'm sitting here, I'm in between the 50 and the golden zone. That's a prime sell zone. But do I want to take that trade? Well, I bring you back to my question here. How do I determine what the trend is? And yesterday, I was evaluating the trend on the hourly, and I judged incorrectly. Well, okay, just because we can identify the trend doesn't mean that this can't go up here and break. That's never what I'm saying. But we can identify the trend. Two traders can look at this without any ambiguity about what the trend is. Unlike Elliott Wave, where it's like, oh man, I'm seeing an ABC. Oh man, I'm seeing a WXY. Oh man, I'm seeing a 1, 2, 3. Oh man, I'm seeing a 3, 4, 5. We lose all of that subjectivity with market structure, which is the appeal, right? And I think, you know, man, I'm an old fart, but you know, I do notice that the younger kids, right? They're very drawn to this, which is why we started including it in our curriculum, because this is particularly in the, let's call it, 25 to 40, in that age range, they're very drawn to this, right? And it's not like it's new. My God, I mean, George Angel and Larry Williams were teaching this in the 80s. I mean, there's nothing new under the sun in the market. Very little is new. This just got repackaged and rebundled, and an FX trader, you know, kind of repurposed it and, you know, kind of created a bunch of lingo that's more tied to how market makers move and react in the marketplace. Now, we don't have the same kind of traditional market makers in crypto or even in futures, but now the exchanges essentially act as the market makers. But that aside, and there are some particular nuances that are specific to FX for this, where this has really gotten very popular. If we're talking about crypto, we still have the same supply and demand zones. It's not like, oh my God, this is an order block. Holy shit, what is this voodoo you speak of? This is just, we're making the distinction here between supply and potential resistance. Let's make that distinction here, right? Because people get this wrong all the time. That's a pivot up there. It's potentially resistance, but it's not necessarily a supply zone. Same thing down here. This is just a pivot. Now, we could have a situation where we do something like this, right? So this is how most of us think of support and resistance. Oh, if we break the resistance, now previous resistance becomes the support. Maybe, but that's nowhere near as powerful as a supply or a demand zone. Infinitely more important to the market. Where's the supply? How do I know it's supply? Well, what came off of it? Right, and look how fast it moved. Right, so as we come back here, it's not as we come back. What happens? Right now, so there's a couple of ways to rationalize that in your mind's eye. Okay, well, so one possibility is we move so quickly away from this, there's unfilled orders here. The other possibility here, as much as we talk about supply and demand, is that you've got shorts here that are defending. Now, that's not you and me, as I said this on the live stream the other day. That's not you, me, and Uncle Jack defending here. That's muscle, right, that can push that market down. That's not you, me, or anyone in retail. That's institutions, right, banks, whales, call them what you will. That's who can defend here. Could be market maker. Right? If we were talking about FX, I mean, somebody's got to defend that here because they don't want it to get on the other side of that. That's a supply zone. Right, now, do we have any demand zones here? So we've established here, let's take this off. We've established here, let's get you out of there, that the trend is up. We've got this little channel break here that was realized here, so I'm going to take this off. All right, let's look at, is there a trade for us here? Well, the market is, what I got? Higher high, higher low, higher high, higher low, higher high. I'm right into a supply zone. Do I want to enter the market here? I know that seems like a stupid question to ask, but no. But that doesn't necessarily, remember, the trend is up. So do I want to sell it here? Well, that's kind of a trader's choice, right? As to whether or not you want to get aggressive there. The advantage of being a seller up here is that you're wrong. You know where you're wrong, right? It's very low risk trade. So, maybe you get something like this, right? Oh, we're going to break a little bit deeper and we're going to get a retrace here. But just based on what I've just done here, there's the first break of the trend line of the channel. That implies to me, wait, do I want to sell this? That implies to me one more push up. So there's virtually nothing here that says sell it, other than the fact that I've got a supply zone. Now, supply and demand zones break all the time, right? Just because it's there doesn't mean the market must react there. I mean, we can see the market reacting there. Now, is that why it's reacting? Is it? Is that why it's reacting? Or is it just the location of where we are? Do we care? Not really. Okay, so back to where we started. Where's the short-term trend? Well, if the trend is up and I'm going to get a retrace, the area that I'm interested in would be this zone down here. And I'm going to draw this here. This is one of the trade-offs here when you work with multiple time frames here. So on the 60-minute, I can, okay, clearly I've got a supply zone. Okay, well, how do I know it's a supply zone? Well, look what happened the last time we got here, and it led to a break of structure. Right, so I know this is solid here, and look how quickly. And let me zoom in there. Look how quickly we came out of there. These little yellow dashes here, that's a fair value gap. That's the distance between this high and this low, right? So we have an imbalance in that area. Let me zoom in there. You see it a little bit better. Do you see this? From the low here to the high here, from this candle's high to this candle's low, we've got a gap here. This is an imbalance, right? No sellers here to participate here. So we've got an imbalance as the market moves up. Now the market comes back here and dabbles into it. Well, pardon me. It looks like, no, it actually catches it right here. So we come right to the edge of it here. A little hard to see with that. Looks like a red line. But we catch it right here and then we keep going. Okay, so as we sit here, now note there's wick that goes through, but we have no close. So this is still very valid as a demand zone here. We tapped it. This is what created it right here. We come out of this, we get the change of character up here. Now, the break of structure hasn't happened yet. We come back down here, we test it, it holds. Now we go up, now I get a break of structure. All right, so all the more confirming that on the internal level here, my trend is up. So again, no ambiguity about where the trend is. Okay, where's the EMA? All right, green and right, rising, higher highs, higher lows. Impossible to get the trend wrong. So where's the trade? Well, if you're going to sit here on the 60-minute, you might say, well, man, that's a long wait for that to come back down. And you might do something like this and say, well, man, would I be interested in that? Well, if we come back down, oh, here, let me push that off actually to make the point here. I've got a zone here where I've got 50% here. So I'm just using the, if I do it this way, I'm just using the 50%. I'm using the GAN box here. I'm just highlighting the 50. So if I bring it back down here, if I come into the discount zone here, look what I'd be doing, right? So from the swing low to the swing high, I'd be coming into the golden zone. Right, this would be, doesn't matter what it looks like. If I come in here, now I'm in the golden zone and I'm below the 50% of that demand zone here. So this is a trade that would be highly, well, this would be an area of interest. Let's say it that way, right? That you might anticipate that you're going to get a reaction here because of the imbalance. Look how fast it came out of here. We're leaving behind clues that say, hey, look how fast we came out of there. Whoa, I didn't get my order filled. So if that comes back down here, this is an area of interest. Now, one more, just an example, because I want this to be burned into your brain. There's the target. There's the invalidation here. Now, you'd be looking for a close below here. Oh, RSI, might be a factor in here if we're coming back down. But this is what you're looking for. So there's 9 to 1. 9 to 1. You got to be able to take that and just roll with it if you get stopped out. Right? It may be that you'd get a new one down here, but right now as it sits, we know we have a combination of events here. We know this is where an algorithm is going to be active, not necessarily a guaranteed winner, but we know an algo is going to be active down here. They're going to participate. Now, we may not get it. We may not get to the golden zone. But if you're waiting for it, right? Look, if we're waiting for it here, do I want it here? Well, okay, maybe you're trading off of the fill of the fair value gap, but really what you want is for it to come down into the demand zone, because it's not uncommon for the market to do that, to come down here and tease it at the 50, but then a little inducement here, and right, so the people that go early, you get a little bit of that, and then they come down here and do this. Now, okay, right, do I want that? That's the one I want right there. I got a little bit of a pop, right? So ideally what you'd get is just a little here. Let's draw it here. We'd get like this. Ideally, we'd get just enough right here to get the change of character. This is what we'd be looking for, a little bit. Just enough to say, hey, because I'm lower, low, lower, high, lower, low, lower, high. Ha! Oh, something changed. I have a change of character. So if that starts to come up here, and now we start to come back down, I know now, if I get, ideally you get it in a 3. If I come back down here, I'm very interested here, and I have just a straight flip here. And you can see I'd be coming down in a 5, right? So, oh, okay, maybe this has got to go up again, right? Before we A, B, C, A, B, C, right, potentially, right? So it's not that you're going to pick the turn here and the market's never going to look back. It's that I've got a trade here. I've got a candidate for a trade with a clear target. Target is the prior high. So I've got to go up here and I've got to revisit this supply zone here from this movement here. You got to be able to stomach that. And you got to take these without, sweating it, right? The trade sets up, you put your trade on, you got to stop underneath it, let it go. Let it go, right? Don't micromanage it. You've got a clear target, right? Because if you do that, and it's easy to say, I know this. It's very easy. So if the market starts to do this, oh shit, oh fuck, oh all right, okay, I'm going to take my, $200, and then it does that. Right, let it go towards target, right? And now, what you could do is if it got this far, you might tighten it up, or take a partial here, where there would be a clear sign of where you might run into here. You might run into some resistance up here, something like this. Okay, well, all right. If this was this would be an example of prior support, right? Maybe that's going to be resistance here. So if you're coming back to, maybe take a partial there, but let a little bit run so you can get to target, because you'll need these to offset all the little losers down here, all of these that stopped you out. And so hopefully that's helpful here. Let me carry on here though. Just so I want to get you the idea. But now, since I have this drawn here, I'm going to draw. Since our trend is up. Let's leave that here. So I'll leave this one in here. And let's go from the 1 hour to the 15-minute. Okay, any change here? Let's get rid of that. Okay, what's different? Right? Do you see how we've compressed the range? Do you note the range? We had previously that huge range. Now my range is smaller. Why is my range smaller? Right? So if say at 15-minute, where's the trend? Where's the trend on the 15-minute? There's no ambiguity about it. Here's the strong low. Here's the swing high. Right? The trend is up. Look at. You got a little red here, but where are the fibs? Here's look what we just did. Right? Plus you can see these. Right? What did we just do? Right? Golden zone. So where's the target? Okay, so let's put a few pieces together. Right? We just did a golden zone. There's the channel. Right? Here's the channel break. What are we assuming now? Right? The implication is that out of this golden zone and of the break of the channel, there's going to be one more push to break this high that would complete the measured move. See how that all kind of plays together? But with the main thing that I want you to focus on is if someone asks you where's the trend on the 15-minute? There should not be any question in your mind, right? There's no, again, it's binary. Here's the last swing low that gave me a break of structure. Here's the, oh shit, again, I don't mean to bring that up, but here's the range that we're trading in. Okay, so also note what happened right here as we hit the golden zone, right? There's the order block. right? Or demand zone, maybe is a better way to say it. Why is it the demand zone? Because this is the last swing low. This is the last low before we had the break of structure, which leaves behind the demand zone, right? Same as here, right? This is the last low that gave me the break of structure, leaves behind this. So if we were to come down, it doesn't mean, oh, if we break this, oh, trend's over. Potentially, I could just wick down into this and then carry on, right? Because it's got to be a close below to change that. As it sits right now, could you have taken that trade? Well, let's go. Here. Let me draw it here, and then we'll go over to a 5 minute. All right. See, could you take that trade? Let's get these highlighted. You want to do this here, the three that are closest, because when I go to a 5 minute, I might have different supply and demand zones. And you may pick up one because there'll be more structure breaks. So do you see I picked up another one here? I picked up another one here. All right. So first come down 618 to the tick. Now look what I'm hitting up here. See, on the 5 minute here, I still have the strong low. The trend is still up. I could probably do this a couple of different ways. Because you can see here we have one channel here, this channel, right? Break, new high, right? So this is realized. It looks like that's a measured move as well, actually. All right, looks like, right? So, a little shy here, didn't quite get there. So failed to get the target before it rolled over. Right, they're not all going to get there. But here's the break, got the new high, right? Now note, it's not a close above, right? So that remains the swing high. Here's the strong low down here. So first attempt, right? Here's the demand, right? It's not support, it's a demand zone. Here's the reaction where we're getting a little bit of a reaction as we hit supply. Where's the trend? Trend is still up. Let's go to the 1 minute. Is it any different? 1 minute. There's the strong high. Now, look what just happened. The 1 minute, now the trend is down. Do you see why? You notice that? Why? Because this is the last pivot that gave me this change of character here. Right? Here's the last swing low that has given me all of this chop here, but here's the last low. Here's the strong high, because this is the high that gave me that change of character. I don't have a break of structure in here yet. Here's the last break of structure up here, but from that pivot, now I've had this change here, so the trend is currently down. The other way, if you're not sure, look where the 50, 6, 1, 8, 7, and 6 is. Right, so this trend here, I'm working out of. I've got demand zones here, and this is an example of where you want to look for those opportunities where if you're looking at the 60, the 15, the 5, the 1, you want to get everybody in sync so that they're all trending the same direction. So if you were trying to trade off of the 1 minute here, you might pause. And because you have the current trend in the 1 minute down. Now, does that mean that they all have to be matching? No, right? I mean, it depends on, do you want to trade off the 1 minute? I prefer not to. Certainly in crypto, I do not like the 1 minute. But I would go to the 5 minute. Say, okay, well, I know I'm hitting some supply up here. Look, I got two big supply zones up here. Before I'm interested in getting long again, I want to see those get cleared, because just because the trend is up here doesn't mean that these supply zones aren't going to be effective in the market, right? You can see it happening. Here's 1, here's 2, here's 3, right? So clearly there's something happening there. Now I can do the same thing here. I've got this kind of a little fat here. Here's a break. So pretty good looking. Let's get it right on it. That's about right. Pretty good looking break here. What does that imply? Right. This break implies that we're going to go down here and break that low and look maybe for an opportunity here if we're going to hold in this supply zone. Now, can you take that trade? Right. Not a whole lot of risk. Where's the target? Right. The swing high. Where's the low here, right? You got to be able to take that. What do you get there? There's 10 to 1. If it breaks here, well, what's up next? Right now you're at the strong low, right? Higher resolve here that this holds, because this is the last swing low that did its job, gave us that break of structure. So if we break here and we just threw an inducement here, which is not uncommon, one will break because they'll see the potential liquidity down at the next one. What's down here, right? There's going to be stops. We know that, right? Very, very high probability you're going to have stops here. Look how quickly it came out of here. Boom, right? Oh shit, come here. Straight up, back down, up again. So the Sonar Labs tools, again, you can do these yourself, but it's just a giant pain in the ass, right? And you're switching time frames can be very confusing to get this right, particularly as you're first learning how to use this. For, geez, what are they, $59 a month? I mean, it's so reasonably priced, it's almost a no-brainer. Now, if you want to get even a little bit better discount here, you use our link below. We get 10% off of that, right? It's in our link tree, right? You'll see it for Sonar Labs, right? We've partnered with them, and you'll see a lot more content from us with regards to this, because this is, as I said, this is where the kids want to, this is how they want to do their TA, right? Not that we're abandoning Elliott Wave, right? It's just I find that, geez, my 27-year-old son is going through our belt system, and I turned him onto this. And he's like, oh, no, man, I like that market structure SMC stuff. And that's my kid. Even he's doesn't like the Elliott Wave. Now, again, but that's, you know, that could be generational. But that's part of the reason why we are going to start to focus on this, including what we're already doing with Elliott Wave, right? Elliott Wave tends to be most effective when you're looking at longer time frames, right? I would tell you best 4 hours and above, right? The counts don't change as often, right? You get some long-term structure. You want to be down here and you want to be trading shorter term. Well, we use this in our futures trading all the time, right? It's very, very, very simple, and the binary nature, long, short, there's no ambiguity about where the trend is, right? And then the risk reward is always favorable because you're trading in these zones here with very favorable risk reward and a very clear target, right? Target is the weaker high, right? This is the strong low, this is the swing high. So this becomes the target. So if it comes back down here, I think at 13.4 to 1. And you know, you want to add some RSI to it. Okay, well look, how did this play out, right? When it hit, so it's hitting the demand zone here. As the RSI goes below 30 and then curls back up, could you have made some money there? Where's your target? Still have that target in play, right? Target is still up here, right? This is the weak high. This is the strong low. Or pardon me, this is the low that did its last job here. It gave us that little change of character here. So we still would be looking for this to push and break that high. What did you get there? That'd be 8.75 to 1. Right, where's the RSI? It's above 50. We're trending, right? So there's no reason no reason to freak, but just because, oh shit, I'm hitting supply zones here, I got to get out. No, that's not what that says. Everything here says stay long. Right, that's the target. Actually, we might get it here if I stayed around for a little bit longer. Holy shit, I did 51 minutes. Okay, guys. Well, there's a lot to chew on. Again, I know I went kind of fast. You got to go watch these two, right? The market structure. There's only 2 videos here. Spend a little time over the weekend. I think that will be helpful to you if you're not already familiar with this. And then Sonar Labs, I think it's a 2-week trial, but I mean, it's a very generous trial for a $59 product that there's no way it won't help you if you apply it. Right, and no longer will anyone ever send me a question like, I can't decide where the trend is, right? Because there's no ambiguity about it, right? That's one of the huge benefits. Okay, guys, there you go. Lots to chew on there. Have a good weekend. We're back. I think we're back to our regular schedule, so live stream on Monday, and we'll take it from there. Okay, guys, see you later.